Funds India and CNBC TV18 present Smart Moves, Smarter Money in association with CNBC Awaaz, CNBC Bazaar.
When it comes to investing in the markets, consistency matters. But in today's fast-changing world, it's not just about discipline, it's about being smartly disciplined. Technology, research and behavioral insights are transforming how Indians invest, turning traditional SIPs or systematic investment plans into intelligent, goal-based wealth journeys. Hello and welcome to Funds India and CNBC TV18 present Smart Moves, Smarter Money. I'm Ritu Bhandari, and on this special episode, we are decoding how investors can simplify their wealth building journeys without losing out on sophistication, and how Funds India's unique blend of technology and human expertise is empowering both investors and advisors to make smarter financial decisions. Joining me on this episode is Manish Gadhvi, CEO of the B2B Business at Funds India, who has been working very closely with independent financial advisors, distributors and investors across India to help them invest with purpose and conviction. Manish, thank you very much for joining us here today. Welcome to the show.
Pleasure. Thanks for having me.
Well, let's begin then with the big picture. Now, Funds India positions itself as a holistic wealth management platform that really helps investors optimize their portfolios in a simple manner. So, explain to us how the integrated wealth platform actually works, and how do you ensure that investors stay on track with their financial goals while creating long-term wealth?
There are three legs to this, right? How do you create financial plans for customers? Then how do you create their mutual fund portfolios? And the third step is how do you keep them on track or rebalance or review as and when needed, right? We believe this is not a DIY journey, right? And it's a long journey. So that's why you need human help all the time. And because of the sheer number of choices that an investor currently has, right? The human help is even more needed according to us. So we have all the three expertise, I think. So we have in all our channels, we have a human connect. We have a very strong research team, which has a very strong proven track record of that. And all our tools help, customers do the right thing. So we've done the journeys, the nudges and all that, which help us deliver long-term wealth creation to our customers.
Today, we are in the era of AI, we are in the era of automation. So, give us a sense of how Funds India is really using these technologies to help investors make smarter decisions, smoother decisions, and how is this really redefining wealth management for the future?
These are tools which we help for our, for the end purpose, which is the customer's financial well-being, right? Most of the tools are analytical in the sense that you don't, let's say if I give you an example, that you have a portfolio of let's say 10, 15 funds and you want to redeem some money for something, right? The question is which fund should I redeem it from and why? And there are things like exit load, performance and taxation. So we have tools like that which really help answer those questions. And then there are things like, what is the optimum number of funds you should hold and stuff like that. So yeah, we use quite a bit of that, but end of the day, it's delivered by a human being, which is even more important.
Now, while we are talking about intelligence, we are in the era of intelligence, we are also in the era of personalization. Yeah. And now, one of the most talked about examples of both of these things, delivering both of these things to the consumer, is your 5-finger framework, and which has consistently, outperformed benchmarks even in volatile markets. So unpack that for us. How does that really work? What does it do for the investor? And share with us some examples of where you've applied that in the recent past.
The 5-finger framework is something that we use to create the portfolios for our customers, lump sum, SIPs, whatever, right? And that's very critical because the sheer number of mutual fund schemes that you currently have, the number of AMCs that you have, that makes it, extremely complex to come and to arrive at, why you should hold which funds and how many funds and when do you rebalance them and stuff like that, right? It's not easy. It's, there are like 50 MCAs and 13 equity fund categories. That choice is not easy. So you need help, and we didn't want to keep that discretionary. So we have hard coded that. It's the way we select funds and create customer portfolios, and the proof of that is that it has delivered a 4% alpha over benchmarks. It has, if you want to compare this model portfolio with any other distribution firms model portfolios, I'm sure this will come out at the top.
Right.
And it's not just one time. So you have to review it periodically. You have to handhold customers when some of those funds don't do well. There's something called mean reversion. So you don't get out of the funds when something like that happens, right? So yeah, that solves the biggest problem for our customers. Which funds do I buy? How many funds do I buy? Till what time do we hold? So all of that we do at our end, and it's up to customers to follow that advice. Sometimes they don't, which is sad. But had they followed that, they would have gone substantial returns. And we also try to educate customers about this outperformance, right? A 2-3% outperformance over a 25-year period can really change your terminal value or the kind of wealth you create. People are not aware about the power of these small, 2-3%. They think it's 1 or 2%, but it compounds. And it's really important.
A large part of the population is dependent on independent financial advisors to make these decisions.
Yeah.
So give us a sense of, how Funds India is really empowering the IFA community as well, because, like you said, you're doing some incredible things with your algorithms, with your APIs that you're creating, but not every IFA out there is tech savvy. Not every IFA out there has the funds to really invest in tech like this. So give us a sense of what you are doing to really make these IFAs also stronger, because at the end of the day, the retail investor is really dependent on the financial advisor, right?
Our core strength is research and tech, right? Research is, I don't think it's truly appreciated in the mutual fund distribution community, because broadly, if you had bought anything, let's say 5-10 years back, you would be sitting on a 12-13% kind of return, and most customers think that it's better than fixed deposit, so I'm well off. They don't know what outperformance means. They don't know what the impact of that is on their long-term wealth. So we try to share all our research inputs with all our advisors and tell them why it's important, right? So you should have research on not just funds and which model portfolios, but something like a crisis plan when markets, let's say, don't behave the way you want them to, something like a lump sum deployment framework, what is an ideal STP plan, whether it's currently needed or not, and you then need advice on all the asset classes. What do you think about equities today? What do you think about debt? What do you think about commodities? What do you think about gold, silver? What do you think about US, China? Whether you should have money in US, China or not. So all of these questions are pretty research heavy, right? These are not easy answers, and I don't think there is IFAs on their own or even other distribution firms tend to underplay this, but it's extremely important, and that's what we are very good at. So we train our distributors to be more research oriented rather than just selling NFOs or just selling SIPs, right? We want them to truly handle customers' money as if it's their own money. And the other part is tech, how simpler you can make customers' life or IFA's life. So all their MIS, analytics, nudges, SIPs, closures. There's a lot of ops, which is, especially when you manage, let's say 300-400 families, there are a lot of transactional things that you have to, be careful of.
Correct.
And that all needs automation, smart things. So we try to solve that as well. So, but the core thing is research and then tech to, simplify your life.
On that note, we are going to head into a short break. We've seen how data, discipline and digital tools can simplify even the most complex wealth journeys. But what happens when investors' goals evolve, or when advisors need deeper insights to guide clients through changing market cycles? After the break, we'll explore all this and more on this very special episode of Funds India and CNBC TV18 present Smart Moves, Smarter Money. Stay with us.
Funds India and CNBC TV18 present Smart Moves, Smarter Money in association with CNBC Awaaz, CNBC Bazaar. Funds India and CNBC TV18 present Smart Moves, Smarter Money in association with CNBC Awaaz, CNBC Bazaar.
Welcome back. You are watching Funds India and CNBC TV18 present Smart Moves, Smarter Money. As India's investor base grows, financial advisors are becoming key partners in helping people stay disciplined even through market volatility. Let's continue our conversation with Manish Gadhvi on how Funds India's ecosystem empowers both investors and advisors to make every investment a smart move. Now, Manish, through life cycle, of course, as you know, our incomes grow, we grow up in life, our needs evolve, our financial goals change. Now, give us a sense of how at Funds India, your integrated wealth management platform is really helping investors stay adaptable and smart through various different financial goals, because the goals you have at 20, 25, 30, 35, 40 will all be different, right?
So I would say there are three phases of the journey of an investor's life, right? There's an accumulation phase, then there's a protection phase, then there is a when you live off your earnings. So it's this is a fairly robust theory which has been prevalent all over the world. And what you have to do is make sure that you use the years where you don't have responsibility to actually accumulate a lot of money. So I'll give you a small example of that. So when I started my career in 2003, my wife started a small SIP of 1,000 rupees or 2,000 rupees. Each installment today is about 60,000 rupees. Now that 1,000 or 2,000 was meaningful in 2003. The 60,000 is meaningful today, right? So small things like that, so use that phase to really accumulate enough money. Then probably when you're married, children, you need some protection, which is in form of insurance, term insurance, mediclaim, PAs, things like that. And then probably you have to live off the bucket that you have created, which is using probably something like an SWP or hybrid funds, or now there is a lot of interest in SIFs where probably on debt side you can make decent 7-8% returns. So something like that. So we tend to look at not just the sheer amount of money somebody has or doesn't have, but in which phase of life they are and what is the ideal thing. And there are things that customer also tell you that this is what the objective of these savings is. So using that, we do create that.
Right. And one of the other things that investors struggle with is feeling that this is all too complex. That tech is complex, or dealing with numbers, dealing with equity markets, investments is complex. So at Funds India, how do you really ensure that your wealth creation tools are really simplifying things for investors, not overwhelming them with too much data, too much insight, and also helping them create wealth?
It's fairly simple. We try to keep it simple. Things that just matter, that's what we try to display. And what that means is you don't show them too many graphs, too many numbers, too many things on a screen which is cluttered. So declutter a lot of stuff. And so we made it dumbed it down in the sense that as much as we can. And I think so our tech team is very good at this on the usability, and we measure them on all these parameters. But I think so I've used a lot of other platforms as well, right, to test them out. I think so ours is fairly decent. And what would you need to evaluate your portfolio is not something that you do in isolation, right? This is with your advisor. And the advisor has access to more tools than the customer has. So the customer just needs to know how much money I have, what is the returns on that, can I do a transaction quickly. So those things are fairly simple and easy to use.
Right. And also give us a glimpse into what the IFA gets on his dashboard or his or her dashboard.
IFAs get a lot of stuff, whether the funds in which an XYZ customer's portfolio is it outperforming, and what if it is not, what are the reasons for that. And that's analytical in the sense that may or may not want to share it with the customer, but he needs to know whether he needs to take any steps or not, because that's ultimately his call or his or her call. Again, then you have stuff like a lot of SIPs get bounced, and you have to then there is redemption, and can you which is the, again, what do I redeem from? If I borrow versus a redemption, what is that going to look like, right? So there are things like loan against mutual funds, where you don't need to sell your equity fund to, if you want some temporary liquidity. So a lot of stuff like that, where we basically try to ensure that if somebody stays on this journey for 20-25 years, because that's when the magic happens.
Right.
So anything that can derail that journey, some temporary correction or some temporary need for money, we try to solve that, because we don't want to interrupt the compounding, right?
Yeah.
But what we should do is probably rebalance, or probably get out of funds which don't live up to their promise. So that is something that we help the advisors with, not necessarily the customers.
Right. I also want to spend a quick minute on the model that you all follow. Now, while most other wealth management platforms are going fully digital, you've adopted a hybrid approach. You have a physical presence as well.
Yeah.
How does that really help enhance trust and create more tangible value for investors as well as IFAs?
You need human touch, especially when something like money, which is pretty important, and people get anxious about that, and they don't share this with everybody very openly. So I think the more you understand people physically, it brings comfort to them, and the sheer landscape of the number of products that you currently have. If you have like 20 lakh rupees, right, you can invest in probably 11 products in India, financial products. So how do you navigate that? This is not something that you can learn off YouTube or some algorithm. You need somebody, probably multiple sessions with the same person to come to a conclusion. So we believe in physical presence. We believe this journey, investing journey, needs a human touch. We don't think this can be automated or can be left only to some algorithm. And that's why we have built presence. That's why and with IFAs also, we think when we want to teach our IFAs what's the better thing to do, what's the next best thing to do, it needs a lot of in-person training. So I believe human touch, human connect is extremely important, and it's a long journey. This is not like a 1 year, 6 month journey with either advisors or customers. This is a 30-year, 20-year journey, and I think so the more you know them well physically, I think so that helps.
And finally, looking ahead, as India's investor base expands, as investors become more and more sophisticated, tech savvy, what are some of the behavioral trends or macro shifts that you think will help shape the Indian market, and how will wealth management platforms like yours really help investors navigate the future much more confidently?
So the financialization journey started off in like 2005-06. when people started learning about SIPs, mutual funds. It's not yet over. I think so there is lot of learning left. There is new product categories like SIFs, which is just launched, right? So there's a lot of learning which has to go through, to customers and advisors. People will have to learn things, and navigating that is not like it's not a tech journey. I think so it's more of an experience journey, and there is, with all new products, there is initial skepticism, then you experience, then there are maybe some small accidents. I think so a lot of that is left with Indian customers. But what you can say about the journey till now is that all traditional products, like there was a report recently that small savings in India are degrowing, right? That is happening for a reason, right? All the traditional financial products itself, right, are degrowing versus, let's say, something like an SIP book. So people are willing to learn, and if they have a positive initial experience, those products will scale. I think so. Financialization is a story in India which has a lot of steam left. There's still a lot of money in traditional products, in physical assets in India. All of that will get financialization, and I think so. Customers will need people who know about these 16, 17 types of financial products. Like, if mutual funds is just one part, then you can buy stocks directly, you can invest in NCDs, you can invest in SIF, PMS, AIFs. So it's like and each of those categories has 300 players, 1,000 players. So it's really complex.
Yeah.
But it will happen. People will learn. There's willingness to learn, because all that skepticism on the stock market itself, okay, to satta hai, this is gamble. I think so that is gone. People understand what is equity, what is debt, what is real estate, what is gold, what is the value of those classes. Now they need to understand who are the better managers, how do you stitch it together and create a portfolio. So I think so that will continue. Somebody who will add value across all these products will stay relevant. Somebody who is biased towards one of them may not be the right person to survive or the right person to advise anybody.
Manish, thank you so much for joining us on the show today. Your insights were absolutely incredible and will help a lot of investors and IFAs out there. Thank you very much for joining us.
Thank you very much for having me.
Well, technology, research and human insight together can turn consistency into conviction and volatility into opportunity. And for investors, the real edge lies in staying patient, disciplined and data-driven, because wealth creation is not about timing the market, it's about trusting the process. Thank you very much for joining us today on Funds India and CNBC TV18 present Smart Moves, Smarter Money. Until next time, thank you for joining us. Goodbye.
Funds India and CNBC TV18 present Smart Moves, Smarter Money in association with CNBC Awaaz, CNBC Bazaar.